What's going on, Chris here? So, to talk about the markets, some juicy kind of prop firm news and what's going on. But the reason why I got into the markets is one, it's a fun game. I don't know, like I like chess, I like strategy games. This is one big strategy game. Whether it's investing, you know, preparing your battle plan for your investing thesis and how you're going to invest, how you're going to systematically um, join the S&P 500 by putting your money in a Vanguard S&P 500 fund, VTI, VOO, or the dividend investing way. It's like fun strategy. So the whole goal is like to optimize returns, beat the market, beat the benchmark, and that's what is exciting. And um, when it came to Walter White or Jesse in Breaking Bad, it was for different reasons. Obviously, they all wanted income. They all wanted different things. Jesse wanted to be the best cook, and he wanted to make lots of money, And then Walter White, he just wanted to be able to support his family and pay for his cancer treatment. Eventually, it became more ego based, and it was to basically show up his partner that cut him out of the business deal. Obviously, a lot of people go into business for different reasons, or the markets, whatever you want to choose. But business and the markets are synonymous. When it comes to the markets, you put up capital for product supply or for marketing, for bringing demand, and that's business. That's a business for you, and you put capital at risk, so then you can make more money return. And that's why it's better to buy than build. You buy a business that's already been cash flowing. That's why real estate and multifamily is so popular, because there's the demands there. It's usually been in place a while, and people are comfortable with the brand name, the face, and it's a machine. It makes money, and it puts capital at risk, and then it gets money profit on top of that. So the same is with the markets. Whether it's investing or trading, it looks different. Cash flow quadrant. So the big epiphany with finances when Robert Kiyosaki, Rich Dad Poor Dad, cash flow quadrant. The whole goal is just to get to the right side of the quadrant, right side of the square. It's not only tax advantaged, but it's also quantitative growth or loss. So that's what's appealing to the right side. And as an employee of wherever you're at, it's linear growth. So there was two aspects I named of why I decided to basically get in business, or the business of trading and investing, is because not only do I have access to leverage of automation, which is also like employees, I have also access to leverage on top of leverage through prop firms. So that's got some drama behind it right now, but the whole idea is that the growth, if you put your knowledge to the test, if you are able to put yourself to the test, it's a fun challenge to bring the best you can to life, to see if you can beat the math, the algorithm, whatever, the market algorithm. So going into it, significantly, the U.S. dollar pretty much broke out to the upside. We had a breaker block, broke the bearish order block, so broke the bears on this weekly close. We retested it, and then we are breaking up higher. So if it is true that the dollar is a safe haven currency and it's on a high time frame, breaking the bears who are supposed to suppress this thing because we're supposed to go all to all-time highs, so then we have to kind of discern, looking at this as a risk-on safe haven currency, keep going up as an index, the dollar index. If it keeps going up, it's going to look worse and worse for those who are taking risk, because the market is saying there's a lot of risk off, activity happening. And then the same is of the euro index. The euro on the weekly broke the bullish order block. We're waiting for it to finally register on my broker here, but this weekly close is basically inspiring a shift in the markets. That's below this orange box. It broke it. So the euro is associated with risk on. So if it's doing poorly, then any pump, if the euro is doing poorly, the risk on is basically risk off. If it's doing well, risk on is risk on. But they're both basically in conflict with each other. The euro, which is supposed to be risk on, is doing poorly, and the dollar, which is a safe haven currency, which is risk off, is doing well. So that kind of divergence and just the indices of the two indexes is not a good sign on a market structure closing basis, weekly closing basis. So going into the commitment traders report using the Williams Money Flow Index, and it looks neutral. But the thing is, in the coming weeks, it might not be neutral. This was the original forecast, and we broke the spiral, the fib spiral here on the weekly. And it doesn't look like we're going to even reach past this high. So there's two problems with this. One is we broke the fib spiral, and two, we haven't closed anywhere close above these highs. So these highs are basically a stronghold point for the enemy, the bears. So we have to kind of take it goal or point of interest to point of interest. And right now, this point of interest is now right here. There's a gap of price, and it looks like we have to wait to see what happens coming into here. Any kind of breakdown in market structure, I'm going to short. We broke the fib spiral here too, so it's not. I mean, it could just drop here, but for the most part, the price looks bullish. I mean, we did break close on the day above here, so it does look bullish. So I think we'll at least go tag this target and fill this gap here. But what happens after that, I don't know if it's going to work well for the bulls because of just the current environment with the dollar and the euro and what it's doing. So this is the S&P 500 an 8-hour closing basis. And here we can see, so this is from the indicator talking about liquidity pools. And this liquidity pool doesn't look like it's been tagged really. It's close. It's come close. But that's kind of what makes me think that we're going to kind of range, break out, and then reach for here. I mean, we could even hit the liquidity pools here, that kind of liquidity pool. But it's a little dangerous to kind of assume that we're going to go there. This most recent liquidity pool that we tagged, which was this one, but I don't think we've really hit that one. And so I think it's going to want to hit it. So if we put a line here on the chart, yeah, it hasn't tagged it. Right there, you see that space? It's going to hit the liquidity there. And that involves going to this target all the way up here and getting shut down by whatever of a mess is here. I have no idea what's here. We go down the 1 hour, see what's going on here. And it's just a huge gap. It just like dropped, and then probably a fair value gap somewhere, some kind of nest in there. But yeah, it looks like it could be here or it could be here. Basically, the target is like a really good spot to just like hold and wait. But overall, I believe it's going to go there. And right now, it looks bullish for the short term. No real news, maybe one event on Wednesday. So, and then as far as like indicators I'm looking at, I'm looking for the 4 hour for the market structure to break. And we haven't broke it yet, so assume bullishness. That's what I'm doing. And so we had this forecast, and the question is, after we come to this target, So what's the next move I'm anticipating? And this is the move I'm anticipating for it to come into the weekly support all the way down here. So this is going to be a nice move going into November for a nice rally into December, into 2024. So I'm not sure if we're going to hit 40.16, but I do have a weekly naked order block, or 12-hour naked order block at that. Oh, this is the euro. Right here. Zoom out far enough. Bring this down. This is the naked order block on basically 40.18. And if we actually go to this picture, 40.18, it's just a little bit above. So I'm not sure how far down we'll go exactly, but we got a nice target here at weekly support after we tag this part up here. So we got a trade plan and nice risk to reward that we can reap the benefits coming down here and then also going up to the upside. So we're going to see how things go, but that's kind of what we're anticipating for the future is a bullish move up, and then we'll see if we are able to make new highs, new closes above this point. If not, then we're going to see a nice reversal going into November. According to this, late middle November, getting ready for the Santa rally. So we'll see how it goes, but that's kind of what we're anticipating.